Cathie Wood, everyone in crypto knows her, and she came out with some news while everyone was screaming and saying, Bitcoin fell, Bitcoin bull market is over, it's over, it's over, it's over. Watching the price fall from 69,000, an all-time high a week ago, to under 60,000 this week. Traders getting flushed out, people are scared. Cathie Wood came in with the voice of reason and said, no. Hang on a second. Bitcoin, I believe, is still going to go over 500,000. I believe 560,000 by 2026. She's got a bunch of models that show all the price appreciation and stuff like that. But her real thesis is simple. Cathie Wood believes that all institutional investors will be required, or most of them at least, will be required to put a portion of their investment portfolio in Bitcoin. She thinks up to 5% most institutional investors will do. These people have billions and trillions of dollars that are sitting on the sidelines, whether they're invested in something else or just dry powder, waiting to be allocated to an asset class. And Bitcoin, she believes, will be that asset class. So if we look at the Bitcoin pullback here, we went up. We almost breached 60. We were very close to 60. We went to $69,000 in Bitcoin about a week ago, 7 to 10 days ago. And we've come crashing down, they're saying. Now we're down below 60. Will's going to tell us what the mechanics of everything on chain looks like. But ultimately what Cathie's saying is don't be concerned. This isn't a concern at all. She's allocated to Bitcoin. A bunch of other people, corporations, entities, and countries are also, and she's saying this is not something to be concerned about. And the general way I think about this is it's a no-brainer, right? It's a no-brainer. Well, what have we seen over the last few years? The people that were the early adopters of this, whether it was corporations putting on their balance sheet, whether it was billionaires, rich individuals, or institutional investors, countries now with El Salvador, anyone that has been buying a material amount of Bitcoin for an extended period of time. And the whole key, right? And you don't have to buy billions and billions and billions of dollars. It was just getting off zero. And what we have found, and these people will tell you, all the people that have already done this, right? The same people I just mentioned, all of those people will say one thing. That 1, 2, 3, 4% allocation that they gave to Bitcoin has outperformed everything else. It's outperformed everything else. Because while Bitcoin is volatile, that's true. That's true. When they say it is volatile, that is true. There is volatility in the market, but volatility can also be your friend. Bitcoin has appreciated much more than any other asset in the market. It has been the best performing asset essentially every year over the last decade. So what Cathie Wood is saying is these institutional investors will do it for a few different reasons. One, Bitcoin is a non-correlated asset. It gives you asymmetric returns relative to stocks, bonds, currencies, commodities, etc. Bitcoin not only outperforms them, but does it on a non-correlated adjusted basis. So when you start to think about what assets these institutional investors will go look at, Bitcoin as a 1, 2, 3, 4 to 5% hedge makes a lot of sense, right? And traditionally, gold has served as this purpose, right? Gold, every institutional investor, whether they own it or not, most of them have some small allocation to gold. Some 10%, some 5%, some 1%, some 0, but most of them have at least something. And I would say that the difference between Bitcoin and gold is we're in a new age. This is the new generation of gold. Everyone has says it. Every rich billionaire out there, every institutional investor, everyone in financial markets is coming to an agreement at once that Bitcoin is the new age gold. It is digital gold, but better. If we listen to Mark Cuban the other day, everyone likes to give him crap, say he doesn't understand Bitcoin. He understands Bitcoin very well from a digital store of value perspective. He said it is the best store of value on the planet, and that's why he owns it. And he's correct. Bitcoin is the best store of value on the planet. It's proven that over the last year. While gold has been down, we're seeing record inflation. We're seeing historic levels of inflation. Your purchasing power is being reduced at a historic rate. You're literally losing 6.2% year over year of purchasing power. And that's just what we know as we talk about every day. Some of these people are telling us on the ground, people who own businesses, who own companies are saying it's 15%, it's 20%, it's even 25%. They can't hire workers. Goods are extremely expensive. They are raising prices to do it, and you are losing purchasing power. And what has gold done? Gold is supposed to serve as that inflation hedge asset, and it has failed. It has failed tremendously. It has failed really bad. It is down year over year. It's down 1% year over year. Bitcoin is up over 200%, 250% year over year. It has proven, it has knocked it out. We might as well hold the funeral for gold. Gold is done. Gold is done. Not only has the price proven it, that's the ultimate test to me, right? The market decides. The market came in and said, Bitcoin is a better store of value. It is a better inflation hedge asset. And the price appreciated because there was increasing demand for it. Demand for gold decreased over time. The price went down. But ultimately, gold, it's just math, right? If you look at gold, not only is it programmatic, we don't know how much, we have a general idea of how much gold is out there. We think we know, right? But the supply is not really known. It's considered scarce, but Bitcoin, we know for sure. We know exactly how much Bitcoin is being entered into the market, into circulation every single day. We know how much is existing. We know how much is held by certain entities and wallets. We know how much has apparently been lost forever. We know how much hasn't moved in 90 days. The on-chain metrics which Cathie mentioned has become an important part of this because you can see exactly, almost in real time, what is going on in the Bitcoin network. We're going to be able to see people that come in and buy billions and billions and billions of dollars of Bitcoin. And what they're going to do is they're going to move these off exchanges, they're going to purchase them, and they're going to store them. And we're going to be able to tell in real time. This is a transparent market. It's unlike anything we have ever had before. We don't know what's happening in the stock market most of the time. Hey, we have a quarterly earnings report. We hear a little bit about it. The stock goes up or down based on if you hit or miss estimates. That's not cool. That's not the way to go. Bitcoin is completely transparent, not only in its supply, but in its trading and transaction volume also. And I think what Cathie is saying here is essentially we're going to see institutional investors opt into that system. They're going to say, hey, that's the kind of market we want to be involved in. And I think ultimately what we're going to find is billions and billions and billions of dollars are going to flow into the market. And what's the one thing we talk about all the time? When the supply is constrained and fixed, and we know exactly how it's going to happen based on software, math, and it's programmatic, all you have to worry about is the demand side. We know for certain that 90%, almost 90% of Bitcoin's supply that will ever circulate, the 21 million Bitcoin, is currently in existence. Currently in existence and circulating. There's 90% of it already there. We know exactly when the last 10% will come into circulation. We know it for sure. And the thing is, with gold and other assets, you don't know anything. Nothing is certain. Monetary policy could change, fiscal policy could change, company earnings could change, asset allocation could change. There could be stock buybacks. You could issue more shares. You could do all these things. With Bitcoin, we are certain. So that makes it super simple from a demand standpoint. So all you're really betting on is this technology going to continue to adopt? Are people going to continue to demand this? Are people going to join the Bitcoin network? Are more people going to buy and purchase Bitcoin? Are more people going to hold the asset? I think for sure. And I think a lot of other people watching the show would agree with me that that's for sure going to happen. And if supply is fixed and demand continues to increase, not only from a retail perspective, but we're talking billions of dollars from institutions now, that is what is going to happen. The price is going to appreciate. We're talking about 10x from here, a little less than 10x, right? Appreciation if we get to 560, that's gold. That's gold. And that's why I made the comparison to gold earlier, because the gold market cap is $12 trillion right now, a little over $11 trillion. And if we get to gold, that flip's going to happen. I think that flip's going to happen. And what we're going to see is institutions are going to stop allocating to gold. They're going to start allocating to Bitcoin, and that's going to eventually take over. I think what's going to be fascinating to watch is how much time this takes. If we go to 2026, that's 5 years from now. That's really not that long, right? So there's going to be another halving cycle, and we'll see how the price turns out. But the thing that I think is going to be fascinating is going to be watching this play out in real time. And Will is going to be key to that, right? So Will is going to come on in a few minutes here, and Will is going to show us exactly what is happening from an on-chain analytics perspective, why the price has gone down a considerable amount over the last few days, where he thinks we are in the midst of this bull market, how long he thinks it will continue, what prices he still thinks we can reach, and so on. So I think Cathie is right. I think we're going to see some explosion here as more institutional investors adopt it. I think any institutions that can join in and get in now is smart. It is an asymmetric bet. It's going to return anything. The volatility is your friend in this situation, right? We're watching the government see record inflation. The Economist had an article out this morning or a tweet that said no one saw it coming. Literally everyone saw it coming. Everyone saw inflation coming. You introduced 40% of the money supply of new money into the economy over the last 12 to 24 months. And The Economist, a publication that prides itself on evidence of producing financial evidence and analysis, is literally saying that no one saw it coming. Hey, the people with laser eyes on Twitter saw it coming. They were very loud about it. They've been screaming about it for the last 12 to 24 months, and they told you that this is what was going to happen. And what we've seen is Bitcoin has reacted to that. Bitcoin has appreciated in price, and that is the only evidence you need in my mind, is that Bitcoin versus gold has drastically outperformed in the face of historic inflation. So what I think we're going to see is institutions are going to continue to adopt this. The people that adopt it sooner than later will be the biggest winners. They will benefit the most from this, and everyone else will be left on the sidelines and miss out on record price appreciation. ETFs might eventually get approved, spot ETFs, and then we'll see other institutions come into the market. As more vehicles get approved, as more corporations adopt it, as more nation states make it legal tender, as more billionaires and retail investors continue to buy it, as the asset becomes more scarce, as the circulating supply continues to dwindle, the price has to go up if demand continues to increase and supply is fixed. We know this. We'll see it play out in real time. I think the next few years are going to be fascinating, but we'll see.